Hey, good afternoon, everyone. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. Today, we're going to dive into a full doc, deep dive, product dive into our full doc programs. And we'll get started here in about a minute to a minute and a half. We're going to let everyone log in. Just some housekeeping rules. This is going to be recorded. We'll look at your questions as we go through this. If we don't get to your question, we will have an account executive reach out to you. Again, this is being recorded. This recording will go out before end of day tomorrow. So we look forward to having a very interactive webinar today. So got two of the best in the business with us. I'll introduce them in a minute here, but we still have some people logging in. Everything we're going to do today is off of our website. This isn't a PowerPoint presentation. I will show one PowerPoint slide though, but everything is driven from our website today. So we've gotten great feedback from previous webinars. We're going to show you a couple other things because one of the biggest questions we get, no, can't answer that right now, sorry, is, how do I get my login credentials? So we'll show you there today how to do that. Started here in about another 30 seconds. Still some people logging in. We really appreciate everyone taking the time out of their day. We know it's becoming a challenging market. Our webinars have seemed like they're becoming more popular because everyone is hungry for more information on how to close more loans. So, all right, let's get started here today. Introduce myself, Jeanmonod here with Angel Oak Mortgage Solutions. I'm a regional sales manager. I'd love to introduce our two panel experts. First, I'll introduce Oscar Ungo. Oscar, introduce yourself and tell us a little bit about yourself.
Hey everybody, good morning, good afternoon. My name's Oscar. I'm a inside sales account executive with Angel Oak. I've been with the company for 5 years now, and I'm really excited to talk to you today about some really flexible options, really flexible full doc options that we have, and opportunities for you to close more loans.
Yeah, great. Thank you, Oscar. And then I have the pleasure of working every day with Scott Gruebele. Scott, please introduce yourself.
Yes, good afternoon, everybody. I'm Scott Gruebele, account executive here in Broward County, Florida, South Florida. Been with Angel Oak for going on 7 years now, and I'm pumped up to talk about the full doc options that we offer with you guys today.
Yeah, so thank you. And again, everything we're going to do here today is driven from our website. We're gonna go through. We're going to talk about full doc, but before we do, we're going to launch a poll question here. How many of you have originated a non-QM loan in the last 12 months? So we'll take about 15 to 20 seconds to answer that poll. But I do want to talk about a couple of statistics. The MBA is forecasting this year for just under 1.9 trillion in originations. And a good portion of that is purchase business, which, 90% of the loans we close are purchase business. So we're glad to have you all on here today. But that agency box is getting smaller and smaller. So that's a 20% decrease from 2022. So we know what happened from 2021 to 2022. So let's look at the poll question here. I don't know if you guys can see that. Wow. Okay, this is kind of counter to what we usually see. So 40% of you have originated a non-QM loan in the last 12 months. 60% have not. So thank you for joining us. We're going to hopefully help you close a lot more loans in 2023. So Scott, let's jump right into it. Everything's from our website. As I mentioned, Scott's going to talk about our first full doc program, which is, and as you can see, all of our programs are listed under here, but Scott's going to talk about our platinum program first.
Yep. Okay. Thanks, John. You guys can hear me? Yes. Okay. Just want to make sure I wasn't on. So there's a lot of reasons why someone would use a non-QM full doc program. And really, at the end of the day, it's very simple. It's if they do not qualify conventionally. And there's a number of different reasons where your borrower may not qualify conventionally. So when you're looking at these loans, keep in mind, if you've sent a loan to your agency conventional lender and for whatever reason it fell out, what we're doing here is we're providing you a solution and an option to be able to close that loan. That's what our non-QM full doc programs are all about. There are a few niches that we do where you might choose us right out of the gate and not look at that conventional option. And we're going to go over all of those. The way we have our full doc program set up is what we like to call our waterfall of programs. So we actually have two different full doc programs, the Platinum Jumbo, which I'm going to go over, and the Portfolio Select, which Oscar will touch on. And as we go down the waterfall of those programs, what you're going to see is that the underwriting guidelines and the requirements begin to loosen up when you go from Platinum to Portfolio Select. So starting with the Platinum program here, this program starts at a 680 credit score, and it goes up to a 90% loan to value. So 10% down is the minimum that we do. We can do single families, we can do investment properties, we can do second homes, condos, PUDs, etc. And we'll go over some of those details. The loan amount on this program goes up to $3 million. So on the non-QM side, guys, with all of our products and programs, we really don't have a conventional and then jumbo. All of our programs are jumbo programs in essence, because for the most part, they all go up to about 3 million loan amount. And this one is no different. 3 million on the high side, 250 on the minimum side. Your foreclosure, short sale, bankruptcy, and deed in lieu seasoning for this program is sitting at 4 years. When Oscar talks about Portfolio Select, you'll see that we have options for even less than that. But for the Platinum program, you're at 4 years. So you can already see where some loans you might have that fall out conventionally because of any of those items would be able to fit right here into the Platinum program. I mentioned we're doing owner-occupied second homes and investments, but one thing that I want to point out on that is that we actually go up to an 85% loan to value on second homes and investments, which is really strong. And we can actually do cash outs on investments in second homes up to 85%. That's hard to find. Now, what I'm seeing currently in the marketplace is because of all of the loan level pricing adjustments that Fannie and Freddie have added to second homes and investment properties, we're starting to see that our full doc programs are pricing better in some cases than Fannie or Freddie on investments in second homes. So I highly recommend when you have one of those hit your desk, definitely take a look at our pricing. Don't just think, oh, non-QM, might be priced higher. Look at the pricing. At the very least, you might see a rate that matches what you're getting conventionally without any cost associated. With conventional, you're probably going to see a cost across the board. So full doc only is what we do on the Platinum program. Again, we have our bank statement program, our DSCR and others, but for the Platinum, it's going to be full doc only. And we do offer a 40-year interest only option. So there's one of the niches I mentioned earlier that you're not going to see on the conventional side. What's really cool about our 40-year interest only program is it's, again, a 40-year loan. The first 10 years, you're going to have interest only payments, and then your loan is going to amortize for a standard 30-year amortization after those 10 years. A couple of cool features. First, your rate stays the same from the beginning to the amortization period when it converts to 30 years. You're not going to get a bump in rate or an adjustment or anything along those lines. The second part that's really cool is that during our interest only period, those first 10 years, we actually allow the loan to recast. So what does that mean? Let's take, month one, you take out a 40 interest only program, your principal balance is $500,000. And in month two, your borrower comes into a bunch of cash and says, you know what, I want to put 100 grand towards principal. By month three, their payment, their interest only payment is going to be based on a $400,000 balance, not a $500,000 balance. So you can see as that goes through those first 10 years, your borrower could put themselves in a really beneficial position when it amortizes to a standard 30-year fixed. Another niche that we offer on this program is our 1-year tax return program in the manner that we do it. So as you all know, on a 1-year tax return program on the conventional side, the borrower on the 1 year, the borrower has to be self-employed for, I believe, is it a period of 5 or 7 years currently, John?
I want to say 5.
5, I believe, right?
Yeah.
Well, it's longer than ours. That's the point.
Yeah, there you go.
So with our program on the Platinum Jumbo, you can do a 1-year tax return program as long as your borrower has been self-employed for 2 years. And there's a little niche there where we're able to capture some of those loans where conventional cannot get them done. Loan amounts over 1.5 million, we're always going to ask for a second appraisal, of course. That's pretty standard in the industry for jumbo loans. And you can qualify off of all liquid assets. So if your borrower owns a business, we can use funds in the business account. If they own a personal, checking, savings, etc., we can obviously use those. We only require 6 months reserves for the subject property on this program. So there's a lot of flexibility there as well.
Right. Yeah, thank you, Scotty. So as Oscar, as Scott mentioned, our waterfall of programs, let's cover some of the highlights that separates, the other full doc program from Platinum, and as Scotty was mentioning, just cover some of these highlights.
Yeah, so before I jump into the Portfolio Select program, there's a common task that everybody runs when they're running an agency loan, right? You're either running DU and LP, right? And you're waiting to get the approved eligible. Do not decline your client if you don't. You want to consult with your account executive first to see whether or not you can place them on Platinum or Portfolio Select. And the reason why they're going to go Platinum or Portfolio Select is because we're giving you more flexible guidelines when it comes to credit, right?
Yep.
So Portfolio Select, like Scott mentioned earlier, is just one tier down. It's got a lot more credit flexibility, a lot more recent housing event and credit event flexibility. We start at a 660 FICO score and we go up to 85 LTV. We go 1 year straight out of foreclosure, short sale, or deed in lieu, and then 2 years out of a bankruptcy. On a Chapter 13, we use the filing date for the seasoning period. On a Chapter 7, we go off the discharge date. Anytime that there's a bankruptcy, it has to be discharged. Other flexibilities, we haven't talked about prime jumbo. We go up to $3 million really on Platinum. We go up to $2 million on Portfolio Select. We're giving you a lot more credit flexibility there because our DTIs expanded from 40 on the front end to 50 on the back end. So we're looking at, again, someone who may have been a year out of foreclosure, they can get a $2 million loan. When it comes to reserves, we offer more flexibility. We only need 6 months of reserves on the subject property, where, for example, with a prime jumbo loan, you're looking at reserves that may be over 9 months to 12 months, and sometimes they're tagging on reserves based on other finance properties. So there are a lot more flexibilities with these full doc options. And then when we talk about credit, I want to mention it now. If you ever have clients who have a couple dings on their credit, or if they just have a couple mortgage lates, like 30-day lates, they may have 160. Again, don't turn down that client. If they are current, then you want to consult with your account executive to see if it meets our current guideline for mortgage lates or lates on just consumer lines of credit, or whether or not we can get an exception for you.
Yeah, thanks, Oscar. So, one of the things I failed to mention earlier, we're going to talk about what we really like to see on a 1003, what Oscar briefly mentioned about credit. We're going to talk about the credit depth, trade lines, all that stuff here. So just a couple of other things. This is being recorded. We will get this recorded out to you before end of day tomorrow. And if we don't get to all your questions, we will definitely get an account executive to reach out to you no later than tomorrow morning also. So Scott, we mentioned, the 1003, the loan application. When you're going through a pre-qual, because I just want everyone to know here, our AEs basically pre-underwrite a file. So Scott, what are the most important things you're looking for on a loan application?
Yeah, so, and as Oscar mentioned earlier, on the conventional side, you're running your DU or your LP and you're looking for that approved eligible. Oscar's 100% right. If you don't get that approval, always call us, because we're going to be able to probably fit your borrower into one of these programs. But our version of your DU or your LP approval, your eligible accept or approved eligible, is our pre-approval. And we base our pre-approval based on the credit report and on the 1003 that you're submitting to us on the front end. So we want to make sure that 1003 has all of the information we're going to need to properly get you a pre-approval back. No different than if you're submitting it to DU, right? You want to make sure your 1003 is complete, all your income's in there, et cetera. So to kind of go through all the steps, income first and foremost, we want to make sure the income is detailed. Tell us all of the borrower's employers. If there's more than one, if it's just one, make sure you list their tenure with the company and obviously the income. Your housing history, to take a step back, your housing history, of course, comes first on the application. We want to make sure that you have us listed if the borrower's renting or if they currently own a primary. If they are renting, please put in how much their rent is. Go down to the liabilities. Please make sure all of the liabilities are imported from the credit report so that we can accurately calculate your DTI, and same for the REO. On the REO, we want to make sure we have all of the properties there so we can see if there's anything that might be on a Schedule E, if there's any other properties we need to look at, what has to be counted into the DTI, et cetera. Assets you always want to have on there and be as detailed as possible. In the event we needed to make an exception, and guys, we make a lot of exceptions. Over 30% of our loans have an exception on them. Could be, they only have 4 months reserves. We're able to make an exception on something like that. Whatever the case may be, by having all of the information detailed on the 1003, it's going to allow us to get a better picture of the loan and be able to look at exceptions and things like that. And then lastly, make sure your declarations are complete. Make sure we have the accurate residency status for that particular borrower. Usually your subject property is going to be there. That information will be there. And the loan lender information page, that final page that comes over that shows what the proposed taxes, insurance, and HOA are, that's critical. A lot of LOSs, for whatever reason, when you go to print out a 1003 or convert it to a PDF, they seem to leave off that page, or you might have to do it as a separate page. So that's another critical piece that we need when we're qualifying a full doc loan for you.
Yeah, one of the things Scott mentioned, 30% of the loans we close, don't meet our guidelines, and having that, we have an AE that works right beside Oscar there. He says that's the DNA of the borrower, and that helps us make a lot of those exceptions. And it's not even exceptions on reserves. It could be, you might be just missing an LTV bucket by a couple of points. That's critical that we have all that information. So Scotty, great job. And as I mentioned, our AEs are pre-underwriting this file at this stage. And just on this call here, we have over 20 years experience just with Angel Oak. We're not saying in the lending, but just with Angel Oak, over 20 years on this call, and that's expertise in the non-QM space. So Oscar, talk about credit, what we look for, trade lines.
Yeah, so we, if you haven't jumped in the pool yet, what was it, 60% of you that haven't done a non-QM loan yet, jump right in. I mean, we're here to help. We're basically like your lifeguard, right? We're not going to let you drown. We're going to be your second set of eyes, and we're going to review the 1003 and the credit report to check to make sure that your borrower meets the initial requirements. You're going to get a phone call from us, and we're going to go over our pre-approval, which are your findings, and we're going to give you your guide and your loan submission checklist the same way that you would have when you run an agency loan. That way you have the documents that you need in order to submit to underwriting and get the least amount of conditions possible. So let's go over credit really quickly. We talked about Platinum, and Platinum again is the tier just above Portfolio Select, where we're a lot more flexible on Portfolio Select. Platinum is an amazing fallout program for agency loans and prime jumbo loans, where we do have expanded DTI on the back end, as I mentioned before. And your client doesn't have to wait 7 years if they had a foreclosure, deed in lieu, short sale, if they had a bankruptcy, Chapter 7, 11, or 13. Okay, our seasoning requirement for that is 48 months on the Platinum program. Now, when it comes to Portfolio Select, we get a little bit more exciting. We get a lot more flexible. I mentioned that we do 12 months out of a foreclosure, short sale, or deed in lieu, a housing event. I did mention that we'll do 24 months out of a Chapter 7, 11, or 13. And when it comes to mortgage lates, we'll do 3 mortgage lates, so 3 30-day lates.
Hold up, Oscar. I'm going to interrupt you there. I want you to repeat that again, because I think that's a critical critical point here to get for our audience and educating and informing them on things like that. That's huge.
Right. So I should say housing, right? So because we don't just look at mortgages, we look at your rent history too. So your housing history, we need documented housing history, and then we do a 12-month look back. So we're going to look at the last 12 months of payments. And on Portfolio Select, we allow 3 30-day lates within the last 12 months, which is huge.
That's big. And we're going to get to some of these questions. I'm actually going to jump ahead. Michael's got a great question here. Scott, you talked about reserves. How long do they need to be seasoned for?
30 days, great question. So with Angel Oak, we're only looking for the last full complete month's bank statement to show the assets required for reserves. Obviously, we can use a 401k, IRA, retirement accounts, et cetera. So we have the same flexibility there. But we don't need 2 months. We only need 1 month. Couple other points I wanted to kind of touch on that popped in my head as Oscar was going over those points on the credit is, first thing is, please keep in mind, guys, on our full doc programs, we have no PMI over 80% loan to value. 85, 90% loan to value, there is no PMI, unlike conventional where you do. The other thing is, we talked about a few different reasons why the loan may not qualify conventionally, where you might not get your eligible accept, your approved eligible. Could be the credit. Maybe your borrower has lates on the mortgage, like Oscar mentioned. Maybe your borrower has 3 or 4 accounts that they have in dispute status that we permit. There's a lot of different things, but one of the main ones is non-warrantable condos. In the South Florida market, that's a huge topic, as well as in other parts of the country. We can do non-warrantable condos on both the Portfolio Select and the Platinum Jumbo program, along with all of our other products and programs. That's probably one of the biggest ones we see.
Yep.
Yeah, it's great, Scott. Great points. Again, this is being recorded. We will get this out to you before end of day tomorrow. And I really want everyone to stay on to the end because we're going to talk a lot about marketing today, where to find these borrowers, how you can really expand, your marketing efforts. Oscar, did you have anything else to add as far as credit, trade lines at all? I apologize. I wanted to get that answered from Michael. So
one last thing, a very common question is, Oscar, I've got a borrower that has no credit. So the minimum the minimum bureaus, if they need reporting, they need at least 2 reporting. There is no exception if they have a third that they've just frozen, that needs to be unfrozen. That's it. That's the last thing I needed to add.
Yeah, so a couple other questions here. Scott, you talked about primary, you talked about a second home, investment properties. Talk about prepayment penalties here. Jacqueline, and I hope I'm asking the question right. The prepayment penalty, there's two questions here. Is there a prepayment penalty on any of our loans? And then the second question, Scotty, is there a penalty if you pay off too much principal on the loan also?
Okay, great questions. Because there is a little misconception when it comes to non-QM loans. The only time we have a prepayment penalty on any of our loans is if the property is an investment property. We do not have prepayment penalties on primaries or second homes. That being said, we offer numerous options to reduce that prepayment penalty from the standard, which is 3 years. You can bring it down to a 2-year, you can bring it down to a 1-year, or your borrower can buy out the prepay as well. So there are options available on the prepay. The second part of the question was, John, again?
Paying off principal early.
Right.
Yeah.
We don't have a penalty for those loans that do not carry a prepayment penalty. So on a primary or second home, they can go ahead and make that payment on the principal. On an investment property where there is a prepayment penalty, they cannot exceed 20% of the outstanding principal balance in any given year if they choose to prepay it down. So they can pay up to 19% of the principal, let's say, without triggering that prepayment on an investment property.
And I have an old friend out there, Mike is in the DFW market here, asked about, and I'll answer it because I want to say hello to Mike here. So about how do we feel about jumbo in rural areas up to 20 acres? After 10, we'll play on an exception by exception basis, but we will, in cases, go up to 20. Mike, I hope you're doing well. Thank you for being on the call today, Mike. shout out. Oscar, purchase, rate and term, cash out. Talk a little bit about delayed financing.
Well, if you have a client who purchased their home, which we're seeing a lot who purchased their home within the last 6 months, and now they want cash out, right? And there are going to be several reasons, but maybe they just want their cash out within the last 6 months because they'd like to go purchase another property, or they'd like to use it to pay down some debts. Then we can do that, but it's delayed financing. We're going to use the lesser of the purchase price or the appraised value, and they can go up to the highest LTV that their credit qualifies for based on rate and term. So the highest LTV on the program.
Thank you, Oscar. Couple of other quick questions. Scott, you talked about LTVs. Are gift funds allowed on any of these programs?
Absolutely. We allow gifts on our primary residences, not on second homes or investments, but we do allow gifts on primary residence. For depending on what LTV you're doing, at the end of the day, basically your borrower needs to come in with 5% of their own funds plus the reserves. As long as your borrower meets those two requirements, 5% plus reserves, the remaining amount can be a gift.
And Oscar, Scott talked about the 40-year interest only. Do we offer any ARMs? What are the terms of our traditional, please?
30-year fixed or our 40-year IO. Those are the two options that we offer.
And because I'm here in Dallas, Fort Worth, I'll ask this next state-specific question about cash outs. Connie, yes, we do Texas cash outs on primaries. So give us a call. I'll send you my email here in a minute. So couple other questions. How do you sign up with Angel? We'll get to that. I'm going to take us through some of our resources pages. Keep the questions coming in. We're going to touch on it. We're almost a half past the hour. We promised an hour here. Oscar, I know we were talking about full doc today. Take us through the other program we did want to talk about today was our asset qualifier program. Let me move a few things down here on my screen, and we'll get back to some of these other questions still too. So go ahead, Oscar, cover some highlights on our asset qualifier. It's a small percentage of our business, but I'm seeing a little bit more and more lately though.
It is, and anybody who specializes in reverse mortgages, you may take interest in this asset qualifier program.
Wow.
We're looking at it's primarily for borrowers who don't have steady income, and that's because they have accumulated a good amount of liquid assets, right? Maybe they've already sold off their business and they decided to retire, or they've worked their butt off for many years and they've accumulated a good amount of money, they invested it properly, right? So this is a great option for them. When we start at a 700 FICO score and we go up to 75 LTV, there is no employment necessary, there is no income, there's no DTI. So it's a very easy application to put together. It's just about becoming very organized with the bank statements or the statements that you're collecting where those funds are located, right? So we want to make sure that those funds have been seasoned for a minimum of 6 months. That is the big question. Is the money that they're going to be using for liquid assets, has that been seasoned for 6 months at minimum, right? You're going to want to collect the statement, the most recent statement from the account that's holding the assets, and then the statement from the same account from 6 months ago, not consecutively, okay? We're going to compare the two. We're going to look at the lesser of the two balances, and then we're going to take the total, and then we have to make sure that that covers their debts for the course of 60 months. And if it does, then as long as they meet the credit requirement, then they're getting a loan. It's a very simple product. Your AE has a calculator that they can either share with you or they can do for you. It literally gives you a green light if it qualifies. So let me go over some of the other basics. It's meant for primary residence only. You can do a purchase, cash out, and rate and term. Interest only is available on this, which is very common on the program. And generally, you're looking at higher net worth customers. And so it's another program that helps you get your foot through the door and continue to build your referral network, with CPAs, with wealth managers, private bankers, and those people are going to be able to send you a lot more business, not just for clients that may qualify for an asset qualifier loan. They're going to send you customers that may need a bank statement loan, a debt service coverage ratio loan. So make sure that you are on all our webinars, right? When we cover the details of those programs.
Yeah, so you bring up a good, I'll do a self plug here. Thanks, Oscar, for lobbing that up there. Next month, we're probably we do these usually every Thursday. We do 2 or 3 a month. Probably it will be the second Thursday in March. We'll go do bank statements again. We just rolled out a ton of enhancements on one of our bank statement programs. So we'll get probably the second Thursday of the month. We'll get that link out to you along with this recording. This is being recorded. We will get this out before end of day tomorrow. Derek, we're going to have someone reach out to you here. He's already got a loan. He's got a pivot to us that fell out somewhere else, which is great. Scott, you do a lot of this. I know you promote. Derek wants to know. Derek, we'll see if we can get you a rush. But what's the average turn times around now for Angelo to underwrite a file, to close a file? Give us some examples, Scott.
Our current underwriting turn times sit at 48 hours. However, we have seen turnarounds within 24 hours. At your worst case scenario, you're looking at 48 hours. So submission to closing, we consistently can get loans done well inside of 2 weeks for you, assuming that the borrower is cooperative with the conditions and we have a timely appraisal. If it happens to be the situation that we see a lot in full doc, which is conventional fallout, which may already have an appraisal, and everything is tight and all we're doing is changing mortgagee clauses, we can get that loan closed pretty quickly. I personally had some where we've gone submission to closing within 4 or 5 business days.
Yeah, but like Scott mentioned, everything's got to be, pretty buttoned up. Back to this asset qualifier, Scott mentioned it when he covered that loan application. Really, the key to this is, as Oscar mentioned also, is getting those assets, getting them from 6 months ago to just recently and qualifying that borrower. And Oscar jumped on some pre-marketing stuff out there, who to reach out to. I like it. He's always thinking about marketing. But, I know we recently just closed an athlete's loan on this program because the contract, was that you, Scott?
No, I said, yep, I remember the scenario. Mm-hmm.
Yeah, so his contract wasn't guaranteed, but he had assets from previous year's earnings, and we were able to take them on asset qualifier. So think about things like that. More questions coming in. And I don't know how to pronunciate this name, but we don't have an I-10 program right now. It's being talked about, but we do have a foreign national program. So if you put in where you're located and your NMLS there, we'll have your account executive reach out to you. Anything else I'm missing, guys, on asset qualifier or any of the full doc programs?
I think we covered it pretty well. These are real life scenarios. Oscar could probably list off a whole bunch of them. I see them all the time. You pre-qualify your borrower, you run them through DU, everything looks beautiful, you submit it in, you pull a fraud guard, boom, foreclosure pops up, wasn't on credit, right? We close those loans, we save those loans. As I mentioned, condo, maybe you did a limited review questionnaire, submitted it into underwriting, they do a little more digging, they find out, maybe they didn't meet an inspection. Instead of losing that loan, give us a call. We can get that loan done for you. And the asset qualifier, I do a pretty good amount of these, and it comes in handy. A real life scenario is the exact one Oscar just mentioned. I had a borrower recently who sold a business maybe about a year ago, and that sale was very lucrative for him. He was sitting on a couple of 7-figure numbers. So we were able to use, even though he's not working because he's living off of his funds that are invested, we were able to use those assets to qualify him for the purchase of a new primary. So these are real life scenarios, guys. They're going to hit your desk. I'm sure everybody on this call probably can think of 1 or 2 in the past that have come up that we might have been able to save for them.
Yeah, so Oscar, still some questions coming in. Scott, you touched a little bit on Jake with the condos. So Jake, hopefully that answers that question. And Scott mentioned this, there is no LTV reduction for a non-warrantable condo. So if it meets the parameters, score, credit, everything like that, we'll do it at a full LTV. Couple questions here about an investment property. We usually talk about this on our debt service coverage ratio program, Oscar, but talk about LLC and any limitations on properties owned.
Yeah, so no limitations on the amount of financed properties, and if your client would like to vest title in their LLC, they can. We allow up to 2 parties on the LLC, so you want to confirm with them whether they're 100% owner of that LLC or whether they're sharing ownership with anybody else, because all parties on the LLC have to be on the loan. Let's say that they don't want that other party on the loan. Well, they can either do it in their individual name, or they can create a new LLC and then we can vest title in that LLC. If it happens to be a refi, then you don't want to touch title prior to closing. We'll do that for you. So, and at that point, we'll either put it in the individual name or in the new LLC.
Yeah, and Oscar touched on that point of they create a new LLC. There's no seasoning on that LLC. So I think that's a huge point that Oscar touched on there. So Oscar, we're getting questions about rates. How do we work with you guys? I'm going to take them before we go to quick quote, because I'm going to take us into our resources page.
Okay.
Hold on, is it the application? Yeah. So one of the biggest questions we get, a lot of people who like to sign up with us after these webinars, or if you're already approved with us, where do I go and get my user request ID? This is right here. So it's under application package, request for user ID and passwords. You fill that out. It shows you an email to email it to our TPO desk, and they'll get you signed up in credentials pretty quickly. But we've been getting a lot lately, so it might last a little longer. So that's the biggest question we get all the time, because we're going to talk about our marketing, and that usually drives how to get credentials. So Oscar, talk about our quick quote and then how to get us a pre-qual.
Before we jump into the quick quote, just because we were talking about getting set up, and it kind of set off a light bulb for the 40% of you that have closed non-QM loans. If you're working with us and you haven't renewed, because sometimes the email for renewal ends up in spam, log on to Convergence and make sure that you've renewed. You don't want to, that when you're ready to send in a loan, you don't want to find out that you haven't renewed the agreement with us. So jump in there and renew before you have to submit a loan. That way you save time.
Or what Derek, hopefully you're already a customer of ours, but that's the exact example. Derek's got to, pivot with a deal that can't close, possibly conventional or somewhere else. And now he's got to go through the broker process. So I want to reiterate with Oscar, don't wait until you have to. Do it now. So, exactly. Sorry, Oscar.
All right, so we're going to go and straight into the non-QM quick quote. Everybody, this is where you will get your pricing, and there's a place where you can click directly in the middle of the homepage, and there's one right at the top next to the login. So when we click on the non-QM quick quote, it's going to ask you for the channel type, and you will be choosing broker. And if you haven't done this before, this is step 1 of getting your loan closed. Not a single loan funds here that does not start with this step. Okay, so we're gonna plug in the information here to make sure that we have a program. And because we're going over full doc options, I mentioned that DTI is 40 on the front end and 50 on the back end, and it is just 50 flat for investment properties. So something that you can do is you can always come to this non-QM quick quote to get a rate, and then take that rate and plug it into either, if you're working with Encompass, and just check that DTI is within the guideline, right? So in this case, we just happen to be using a hypothetical, just a scenario, $750,000 loan amount, credit score 760 and above, the loan to value at 80%, the housing history. Again, guys, remember, we mentioned that housing history, we can do a 12-month look back on Portfolio Select. We do 24-month look back on Platinum. And so you want to leave housing history, if they haven't had any lates, just leave that as 0 times 30. The property type is 1 unit, transaction type we're going to leave as purchase, and it defaults to borrower paid compensation. So if you're going to be pricing out lender paid compensation, then you want to make sure to click the drop down and choose your lender paid comp. And as soon as you finish pricing out your scenario, it's going to give you, as long as it fits the credit and LTV bucket, it's going to tell you the two programs that it may be placed in. And at this point, what you want to do is you want to click on view rates, and it's going to show you the rate stack. And so it's showing you pricing below and above par. And so above it, we've got a credit that's being given back to your client, reducing total closing costs. Below that, you're buying down the rate, and those are the costs, okay? So at this point, you're not locking a loan, okay? And loans aren't locked, all rates are floating until they're locked, of course, right? Rates can change daily. This is just for you to get a ballpark estimate. And what you want to do is what you want to indicate to your account executive who's going to be reviewing your 1003 and credit, what they should use for DTI. So let's just choose the 8 1/8 priced at 100. And we're going to scroll down, and then we're going to click the blue button that says select option. And it looks like a blank screen. You just have to scroll up. This step, you can either drag and drop your MISMO 3.4, or you can skip it by clicking next, because we're going to require the 1003 in PDF format, all pages anyway. So at this point, you want to choose your account executive from this drop down. And then, you know, if it's Scott, it would be Scott. If it's me, you just type O on your keyboard and you select me. And then you fill in your information. And when you're done filling in your info, make sure to upload your 1003 and credit report, again, all in PDF format, into the folders. As long as you have everything on the 1003, you don't have to upload a 1008. And last but not least, if there's any additional documentation, and this is something that you've probably already spoken to your account executive about over the phone, and maybe they've requested anything in addition to the 1003 and credit, you can upload it to the additional documentation folder, and that'll accept multiple documents. Because we're talking about Platinum and Portfolio Select, where we allow recent housing events and credit events, make sure to indicate the seasoning. So if it's a bankruptcy, the bankruptcy type, and the date that it was discharged. If they had a foreclosure, deed in lieu, or short sale, the date the housing event was completed. And the additional comments box is the confessions box. This is where you're gonna, confess anything to your account executive. It stays with us. It's for our eyes only. Remember, we're gonna help you structure this loan. And when you're done, click submit on the bottom right. Just wait a couple seconds for it to say successfully submitted, and you're in line for review.
Yeah, Oscar, two things came up. You mentioned something, and maybe I'll throw this out, give you a break here. Scott, seller concessions, if they're starting to play a little bit more of a game, they're more important these days than when the market's kind of shifting a little bit to more of a level playing field market. What are our seller concessions, Scott?
Absolutely. We allow 6% seller concession on a primary and 3% seller concession on an investment property. Great point, because we're seeing that now more and more on contracts.
Yeah, and as we showed you that rate stack, that all those seller concessions can be used. So let's don't forget to ask about that. So thank you forgot who asked that question, but thank you, Scott. So we've talked about. Well, I'm going to go back to the home screen. We've talked about our full doc programs. Again, this is being recorded. We'll get this out before end of day tomorrow. We've talked about our full doc programs. We've talked about our asset qualifier. I just want to make sure everyone remembers all of our programs are right here. So let's, anything you need to know, there's highlights on our programs. And again, we have over 20 years experience just on this webinar today with our account executives. And there's not other people in the industry in the non-QM space that can say that. So Scott, a lot of people want to see how they can market themselves differently. So let's talk about how you get to our marketing portal.
Absolutely. So the marketing portal, I like to call the most underutilized tool in the game. It's for any approved broker can access the marketing portal. You're just going to need your credentials to access them. If you don't have your credentials, reach out to your AE if you're an approved broker, and we can have those assigned to you. Or if you're not approved with us yet, reach out to your local AE and we'll get you guys set up. But basically, we are trying to add as much value to our partners, to our relationships as possible. we realize that everything starts on the front lines with you guys and the real estate community. If the real estate community is not aware of what non-QM products and programs are, they can't sell homes to those types of borrowers. So we want to equip you with all the tools you need to be able to properly market and educate that community. And what's really good, well, you'll see a lot as we go through these products and programs, is that this is different. When you're presenting or marketing a non-QM product or program, you're presenting something that's different from what your realtors are already hearing. So you're adding value to your realtors, which is really what we're looking to do at the end of the day, to separate yourself from the crowd of all the other loan originators out there. So when you talk to them about a non-QM program with, 1 year out of foreclosure, or a borrower that may have had a bankruptcy, or on a non-warrantable condo, or a bank statement program, a DSCR, these are things that really set off realtors' light bulbs. So I highly recommend using this portal to help you present them. So if you go to our homepage and you click on that login screen, that's going to take you to the login page for the portal. John will go ahead and log in here so we can use an example. Okay, so here we are, and you'll see the tab at the top for the marketing portal. If you hover over that tab, you're going to see all of the different sections we have: presentations, whiteboards, social media, and flyers. We'll go over them together. So the presentations, if you can click on that one, John, what we've done here is we've basically put together a full PowerPoint presentation for you as a loan originator to be able to present all of these non-QM products and programs, in addition to your conventional programs and everything else that you offer, all on one PowerPoint slide. The beauty of it is it's 100% customizable. So you can literally go page by page on this PowerPoint and upload your logo, your contact information. You can edit any of the text that's in there. You can delete any pages you may not want in there. You can add. It's 100% customizable, but it gives you a template to be able to save this to your desktop and use anytime you want to go and present non-QM products and programs. There's even a flyer here, Realtor Event Flyer. If you click on that flyer, you'll see that you can customize that flyer. You can input your logo, your contact information. You can input the date and time of the event that you're holding, lunch and learn, or whatever the case may be, seminar, and even an RSVP contact information, so that you can email this flyer out to your entire database, put it out on social media, and promote your event using this flyer, which you are then going to take the PowerPoint presentation and use that to present. This is powerful, guys. I have a lot of my brokers and originators that use this religiously. I've personally gone out and presented with them and gone through this PowerPoint with them. And I'm talking, some of my brokers were able to get 30, 40, 50 realtors in a room and discuss non-QM products and programs. It was a home run for them.
Yeah, Scott, it is the most powerful presentation you can give out there, and I always say this, it's 9% of the loans we close on our bank statement loan or 1099 program, 9% are actually realtors. And we gotta, this is probably the lowest of people that have not originated a non-QM loan on this webinar, down to 60%. But if 60% haven't originated a non-QM loan, what do you think, a realtor knows about anything about non-QM loans? And I'm going to throw out a plug for Scott. Yesterday, he did a realtor presentation in a non-warrantable condo. They actually did it in the penthouse, which I thought was really, really slick. But why not? I know I'm never going to drive around town again looking at a condo and seeing if there's, either a realtor or an LO listed somewhere near that property. So, but yeah, it's a powerful presentation. So let me go back. If 9% are realtors, if Scott gets 30 realtors in a room, he's probably going to get, the loan office is probably going to get 2 or 3 deals out of that presentation. And we don't say anything about Angelo.
Correct.
It's all about the loan officer and how you are their trusted advisor. We're just one of your investors.
And might I add, John, that the presentation we did yesterday, it's at a local building here in South Florida that is a well-known non-warrantable condo, because the association is still control of the developer and a couple of other issues. but Angel Oak is able to lend there. So I thought it was really crafty by this loan officer. They used this exact flyer and that exact PowerPoint to promote the event, saying, hey, we're going to talk about non-warrantable condos in this building in the penthouse, and we were able to get a good turnout. So the marketing materials work. Again, it's about us adding value to your business as an approved broker with Angel Oak. If we can hop back over to the portal, John, let's go over as we go down in the marketing portal tab, whiteboard videos. These I think are not used enough. So these are basically those little 1-minute videos that you guys have probably seen. I like to call them stick figure videos, where we're talking about a bank statement program or a DSCR program or a borrower that has had a housing event. And it's designed for you as an LO to be marketing that information to a realtor. You can copy paste these on your website, any of your social media pages. You can shoot an email out. It's a fun little way to do something different and shoot an email out with a video attached that talks about these different products and programs. And as you can see, there's 6 of them here, basically every product that we offer. There's no mention of Angel Oak in these videos either. This is you as an LO sending this to your referral partners to try to educate them about a product. In the next tab down, you'll see we have social media posts. So obviously in this day and age, we do a lot of our marketing in social media, myself included, and we're always looking for content, right? So here we've basically provided you content where literally within just the click of the button, you can download any of these images for any of the different programs we offer, asset qualifier, DSCR, bank statements. You can use those images to post to your Instagram, Facebook, LinkedIn, whichever one you want to use, or all of them. And we even include beneath each image, you'll see that we have pre-canned verbiage that you can literally copy paste and slap onto your post. If you want to market this to realtors, we have a paragraph there that basically talks about this program to realtors. If you want to market it to borrowers, we have some different verbiage there that'll make it easier to understand for borrowers directly. But again, these are tools that are free, simple, and easy to use to put some content out there. And then last but not least,
yes,
go ahead, I'm
I just
sorry,
want to add here, you politely use the word underutilized. Guys, use it.
Yeah.
I mean, we've invested a lot of time, energy, and resources into developing these for you on your behalf. And Oscar, how much does it cost?
It's absolutely free, and it's a service. It's a free service. And so, I just wanted to piggyback off of, again, go back to the realtor presentations. If I get loan officers that are doing cold calls, and sometimes the office that they're cold calling, right, the realtor office that they're cold calling is at a pretty long distance, far distance from them. So, sometimes they just see that as a barrier to entry, and it doesn't have to be. It doesn't have to be. If you're calling on an office like they do, and they say, hey, I'd like to, my name is, let's say, was it Devin that's on the call or David that was on the call?
Derek. Yeah.
My name is Derek, and I'm from XYZ company, and I'm calling because I'd like to set up a realtor presentation for your office, and I'm going to teach you all how you can grow your commission by X amount of money this year before the year is over with alternative programs. I don't think a single realtor is going to tell you no when you're telling them you're going to help them grow their business this year for absolutely free. And if that office happens to be pretty far from you, then we offer Zoom. We have Zoom available. So if you don't have Zoom, or if you don't have any other way of sharing that sort of application, then you just have to contact your AE, set up that meeting, and then we're going to share that Zoom link with you. And the great thing about that is that you get tons of attendance, because people aren't waking up thinking, man, I've got to make it to that presentation, and there's a ton of traffic, or I have this going on in my life, and I may not be able to make it. They can attend on their phone, on the go. So, it's underutilized, and you should utilize it because it's absolutely free. It's a free service that your AEs provide. Make sure to pick up the phone and call them today, and start with the people that you currently work with, because there are plenty of circumstances that we see where, I have a loan officer that'll call me and say, I just got a call from a realtor that I've worked with for years, and they didn't know that I offered a bank statement program. And they've been sending those borrowers somewhere else.
or losing them, yeah.
Losing them, yep.
And Derek, I'm definitely grabbing that penthouse. That's slick. So thanks for the feedback, Derek. Really appreciate it. And then Scott, last but not least, on the marketing portal.
The flyers. So the very last tab there. So what you guys will notice here is that every single program we offer, and then some, has a flyer associated to it, whether it's just a flyer saying, hey, realtors, learn about non-QM, or let's talk about the bank statement program specifically. Or if, let's say you wanted to market, as we said earlier, to CPAs who can refer you to a lot of self-employed borrowers. We offer flyers for all of it, interest only, foreign national, platinum jumbo, etc. These they're all pre-made for you. Again, 100% customizable, where you can put your logo and your contact information on them. And you can even co-brand these if you're getting together with a realtor or a referral partner and you're putting these out there to the public directly. So as you can see, this particular one was customized by a Nick Tolley from Fairway Independent. He put his logo in the top left-hand corner. He slapped his picture in the bottom right-hand side, and he put all of his contact information in there. So this flyer is an Angel Oak flyer, but by customizing it and saving it, this looks like a beautiful flyer that was put together by Nick and Fairway. And then he's able to go and, like we said, paint the town with these, drop them off at your referral offices, send them out via email, post them on social media, or all of the above. Again, guys, it's just about us adding that value back to you guys, like Oscar just mentioned. What we're seeing in this market, we hear a lot of the back to the basics, right? Get back out on the road, get in front of your referral sources, your customers. Realtors are hungry for information right now. They're looking for something else they can add to their tool belt to help them sell an extra house or two. So take advantage of these products and programs that we're offering you to do that.
Yeah, and I'll really draw to this, to this audience. If you do find success with it, please share it with us, share it with your AE. It really, or if there's things we can do better on a flyer or a whiteboard, I won't say whiteboard, but a flyer or a social media post that you change, share it with us. We'd be glad to, to do that with you. And like Scott said, the realtor presentation is completely customizable. Nothing about Angel Oak on there. One of the things I did want to bring you guys, and let me see if you guys can, let me know if you guys can see this. I'm going to change a couple things around because Oscar touched on this earlier. And I think, can you guys see the slide I just brought up?
Yep.
Yeah.
Yeah. So today we just talked about full doc asset qualifier, right? So we'll help you find these borrowers. So here's just a few suggestions. Go to other large banks, credit unions. They're not, right now, they're not signed up with us, right? So go find out where they're doing where their fallout's going and get it from them. CPAs, Oscar talked about it earlier, divorce attorneys. We're bringing this up here because usually with a divorce attorney, maybe there's something wrong with the credit or, so market to them. I was at an event last Wednesday night. There was a loan officer there who's also a CPA, focused mostly on the accounting part of it. She had no idea there was a bank statement loan available out there for her borrowers. So this is the time of year. Go work those CPAs. They might not take your call right now, but if they do, great for you. Hard money lenders. I don't know, Oscar, maybe you want to talk about hard money lenders here?
Yeah, hard money lenders are amazing resources as well. I mean, their loans are meant to be short-term loans, and sometimes people end up on a hard money loan that's business purpose, and they end up buying a primary residence. So when we talked about refis, and people sometimes say, well, who's refinancing nowadays? There are plenty of people that need to still refinance because they ended up getting, especially people that need a long-term loan that didn't qualify for an agency loan in the first place. They need long-term financing. They need to move out of a hard money loan or a private loan into something non-QM. And so hard money lenders are amazing referral sources for non-QM loans. They've lent money out. They definitely want their money back so they can continue to lend money out, and they're going to refer you that business so that you can help them, their client refi. And that client's going to become your client for life.
Yeah, Oscar, so you're making me think of something else about cash outs, right? We're talking about short-term interest rates going up. well, what gets affected the most by short-term interest rates? It's credit card debt, right? Credit
Yep.
card debt is its highest. I think it's almost ever been. I think it's almost getting close to I thought I read last quarter was maybe 900 billion, almost close to $1 trillion. So Charlie asked a question here. Well, what's the max cash in hand that will allow? And Charlie will allow up. I think we've already answered your question, but for everyone else, we'll allow it to $500,000 cash in hand. And guess what? We'll probably, depending upon the loan to value, get an exception for additional cash in hand. So maybe pay off some of that higher interest credit card debt. Create your own little mini refi with cash out refis. So think about stuff like that. Hey guys, I know we're at the top of the hour. Couple things before I let Scott and Oscar close us out. This is being recorded. We will get this out to you before end of day tomorrow. There is a slight survey when this is finished. If you please give us some feedback. Like I said, we based on previous ones, we always get, how do I get my login credentials? So that's what drove us to show you guys where you can get those. So we really do appreciate it. So Oscar, give me something tidbit. I already wrote down what you said. If you haven't done this before, and you jump in the pool, I'll be your lifeguard. I wrote that down. I'm using that from now on. But anything else you want to add here, Oscar?
I mean, I lose sleep at night thinking about all of the Portfolio Select and Platinum loans that don't get closed because someone runs DU and LP and they didn't get an approved eligible, and they just tell that bar, you know, this isn't something that I can help you with. That bar ends up getting a hard money or private loan when you could have helped that bar and you could have closed that loan. So, you know, I think the moral of the story is consult with your account executive, jump on the quick quote. If that ever happens, it's going to take you less than 2 minutes to do. And at the end of the day, you can help that bar. And then down the road, you know, if they had a bankruptcy, foreclosure, or deed in lieu, once they do meet the seasoning for a agency loan, then you can help them refinance again.
Scotty?
Yeah, so as the 40% that have closed a non-QM loan in the past on this call can attest to, non-QM is an asset to your business. And in the current environment, it's an absolute must add to your business. As a loan originator, you need non-QM products and programs in your tool belt. 2021, 2022 were different times. There were loans falling on everybody's desk. The majority of them were conventional. That's not the case anymore. And so originators need to be able to make up that volume. And one of the best way to do it is to start to become more of an expert in non-QM products and programs. We are your friend. We are here to provide you solutions and options when you cannot get a loan done conventionally or elsewhere for whatever reason. Reach out to us. Always make your Angel Oak account executive your first call when you have a non-QM loan. Reach out to us. We're going to go over it with you together. If we can do it, great. We'll set the terms and get it moving. If we can't, we'll be right up front with you and let you know why we can't get the loan done so you can see if you can place it elsewhere. But at the end of the day, it's about providing value and solutions to you guys.
Yeah, a couple of things there, Scott, you touched on, and Oscar, your account executive is your confessional booth, and it's the expertise and the longevity we have with our account executives. They close. There's probably not a scenario out there that they have not seen, and they know those second, third, fourth, fifth level questions to ask. And guess what? If they're not sure at the pre-qual stages, we don't wait until this comes into underwriting. At the pre-qual stage, they get that exception up front. So that exception on that pre-qual follows that loan through submission, underwriting, and into closing. So we show you how to market to your referral source, but we know how valuable your referral source is, especially these days. So as Scott mentioned, those 40% that have closed a non-QM loan, congratulations. And hopefully it was with Angel Oak. For those of you who have not originated a non-QM loan, please, give us a shot. We'll earn your business. I promise you, we'll take care of you, your borrower, and your referral source. So, Scott, thank you very much. Pleasure working with you all the time. Oscar, I love you guys, man. You guys are the best. I appreciate it, man.
Love you too, John. Thank you.
So, guys, thank you, everyone. I know we ran over a little bit. This will be sent down. Please take that short survey and have a wonderful afternoon. And we look forward to working with you. Thanks, guys.